Welcome everybody to another episode of Making Risk Flow. Today is going to be a very exciting one. I'm here with David McMillan, who's like a veteran in the industry. He's worked at some of the largest global insurers in different geographies and in very different types of insurers. So really excited about the podcast today. David, welcome and thank you so much for joining me.
Well, thanks, Juan. Good morning, and thanks for the opportunity to speak with you and your podcastees.
Indeed. Let's start with an overview of your background. As I mentioned, you have a great experience. Give us an overview of your experience and what you've done.
Well, I'm not sure. Firstly, I'm not sure how I feel about being described as a veteran, but I guess I am. I've been certainly around the insurance industry for a few decades. Prior to insurance, I started my career in manufacturing with Hewlett-Packard. I worked in one of their divisions, qualified as an accountant there, and just did a lot of stuff around process re-engineering and advice into sales and innovation parts of Hewlett-Packard. That got me into consulting. Spent about 12 years with PricewaterhouseCoopers as a consultant. Initially focused on manufacturing, distilling, brewing, consumer goods, that kind of thing. And then I morphed into financial services. In truth, I followed the girl to London, and that was just when Big Bang was happening. So there's a lot of work going on with banks, insurance companies, asset managers, and I started to get stuck into that work. And I guess initially I was very much focused on what we called at PwC at the time strategic performance improvement. So big transformation projects with a strategy element to them, and that's important because that's really what I've done all the way through my executive career. I was headhunted by an old consulting client of mine into Aviva initially, and I guess my first role in Aviva was I led Aviva's affinity business. So all the business that was sold through either banks or retailers like Marks and Spencer's, affinities like Saga, and also motor manufacturers like Porsche and Ford Motor Company. Did that for a few years, and then started to we grew that business quite spectacularly, and I guess that got me into the eyes and the thought processes of some of the senior people at Aviva. So I then did a series of roles over many years. Became COO of Aviva's UK general insurance business, ran the RAC for a while, became CEO of the UK business, where we launched Quote Me Happy, which was Aviva's first digital general insurance business on price comparison websites. So that was a great role, really super broad CEO role. Big chunk of the general insurance market in the UK at the time. Unfortunately, I was enjoying it too much, and I got pulled into being group transformation director, working very closely with the chairman, who had become executive chairman of Aviva at the time, a guy called John McFarlane, who went on to become chair of Barclays. So I worked with him on the transformation of the Aviva Group. Looking at around 50 business units across the group, and my reward for that stint with the chairman was to be given ownership or CEOship of Aviva's European and EMEA businesses. So this was businesses from I guess in the West, Ireland, all the way through France, Italy, Spain, Poland, Lithuania, and we also included within the European portfolio, India and Turkey. So very, very kind of broad remit across general insurance, asset management, life insurance and businesses, mixture of growth businesses and also businesses that were in real kind of change and turnaround. I guess from there, I was approached by QBE to become their group COO. Which was interesting. So that was, I headed up strategy, technology, claims, offshore operations. This is also where I came first into contact with Cytora. So at QBE, we had a digital fund focused on, I guess, insurtech, fintech, with about 100 million Aussie dollars. That would have been impressive. 100 million Aussie dollars invested, and Cytora was one of our first flagship investments.
And ultimately a very successful one.
Yes, indeed. We were talking about that the other day. Yeah, very, very successful investment for QBE. And I guess bring it back to today. So I was headhunted from that role into eSure, which many of you will know, mid-size UK insurer, motor and home, about 2.5 million customers. And I was brought in by Bain Capital Private Equity to really initially turn the business round, and then really transform it and build it into a digital powerhouse. Did that for 6 years, and we sold the business to Ageas, the Belgian insurer, in April 2025, handed over the keys in October 25, and I guess I'm now embarked on a portfolio career, and the first role I've taken in that is a role as chair of Jensten, which is a UK commercial broker. It's been through a bit of an acquisitive history, so it's done probably about 30 acquisitions in the last couple of years, and we're looking to continue to on that journey, trying to build a I guess commercial insurance powerhouse that can go up against the likes of Howdens and Ardonna. But I'm very early into that. I started that about 3-4 weeks ago. So,
and also backed by Bain Capital.
Correct.
It's interesting how after that introduction, you were challenging me on the term veteran. I mean, clearly.
Fair enough. I submit.
Yeah, I think it's obviously you've worked in, as I mentioned, in some of the largest insurers, but I think what's particularly interesting is your transformation angle to all of them, right? In all of them, you were either doing a turnaround or just accelerating growth, but it was not about just a business as usual type of role. And I think it's also particularly interesting your background in, you mentioned manufacturing. I'm sure you did a lot of lean activities in there, and how that all those fundamental concepts apply to insurance too, right? It's like, how do you transform the insurance operations by removing waste and just focusing on what drives value?
Well, I did back to my early consulting days. I mean, I did a lot of work that was around how do you structure a factory that is, it's got raw materials at one end and it's got customers at the other. And certainly when I first came into financial services, I very much had that mindset of, is this factory well set out to, and are the processes well set out to service customers? And to your point, Juan, I certainly found initially, and I think it's still true today, that there is so much waste and dysfunction in a lot of financial services companies. The technology's not joined up, the processes are not well joined up, and as a result, services as our customers are not being well serviced. And I guess in spirit, a lot of that thinking was invested in the eSure transformation.
I think that the fundamental of lean, of you should remove any step that is not directly providing customer value, I think aligns very well with what you just described, right?
Yeah, I think we're very ideologically aligned on that.
Okay, so perhaps building on the, I think the Issuer experience probably is, well, is your latest one, but also brings together a lot of your experience. So let's start with, obviously, Issuer, as you said, it's a mid-sized insurer. When you took the keys of Issuer and the turnaround, what were the pillars of of like the investment thesis? When did you think you're gonna outcompete much larger insurers in the market?
Well, look, I think there are a couple of things that we anchored on quite quickly. And I guess the first one was culture. So eSure was a 20-year-old company when I joined it. It had originally been very, very innovative. It had been in the vanguard of companies that had moved from broking to telephony. So it was like Direct Line at the time. It was a pioneer in terms of telephony based insurance, and it was also in the vanguard of companies that had gone into price comparison websites. So it had an innovative heritage, but I think it'd been pretty underinvested in for the period immediately before I joined the company for many reasons. It hadn't properly adapted to digital, and culturally, it was really, really quite introverted. It was very proud, very introverted, and quite slow moving. And we wanted, I guess I had a sense of trying to create a company that was humble, but humble from a perspective of looking out at the world with a big, big ambition. So we did a lot of work initially on culture and also on mission and purpose. We set a purpose for the company of fixing insurance for good. A sense that we needed to do something that was not just about making money. We had a transformational zeal to make the process of insurance better for customers. We felt there were a lot of slow-moving competitors with monolithic, complex legacy technology stacks, and if we could create something that was faster moving, that would be a way that we could outcompete. So we really set ourselves the mission of becoming the preeminent digital insurer in the UK. And I guess we were going after two things there. One was really having I'd grown up in a lot of organizations where people would say to me, David, this change, it's so painful. Can we just have the change stopping and we can get back to business as usual? I wanted to create an organization that really, really embraced and loved change and loved it when it was really fast, but it was really ambitious, really dynamic. So we were certainly trying to do that culturally. And to your earlier point, Juan, we also wanted to create a company that was very, very centered on the customer and quite obsessive about and detailed about removing waste and inefficiencies that were getting in the way of serving customers effectively. So that's kind of where we were anchored in the beginning. In terms of values, I'd done some quite interesting work, or we as a group had done some quite interesting work at Aviva, and in a way, I carried that work on values over into eSure. So the behaviors that we focused on were only three. It was play strong as one. So the sense that this little company of a couple of thousand people, we needed to all be supporting each other, behind each other. We had no room for factionalism or politics, which you sometimes see in the bigger companies. Second thing was dare to do different. So the sense that if we only do what the bigger companies do. There is no way we're going to be successful. We don't have the resources to match them. And the third behavior or value was ace what matters most. So this sense of, we've got to execute, we've got to deliver. It's not just about having theories or high level plans. So that was really how we started on our journey.
Clearly no small change, right? You've said it in a very simple way, but you've changed culture, values, speed of change. It does sound like a full overhaul of the DNA of the company to some extent. So did it have any, so from a, to what extent were you able to drive that through the kind of existing team versus, I assume you had to bring in other people. Did the existing team adapt to kind of the new reality?
Well, look, we had certainly in terms of an exec team, we had quite a change in the exec team. So most of the exec team that came in, the exec team that changed the company were fresh into the company, and we tried to. But we had a couple of people that we pulled through from within the company and into the exec. And I guess at that time, and it's quite an important thing, a part of the CEO's role is building a high-performing, high-quality team that works together well as a team. A couple of things we were thinking about. One was this sense of what I call DNA plus DNA. And by that, I mean having enough insurance DNA so you don't blow yourself up by not understanding how an insurance company works, and how the balance sheet works, and how claims and underwriting and all these good things work. So that's the DNA part. The D and A part is digital and analytics. So we really invested in bringing talent from outside the sector to really help with innovation. So, for example, the CTO, Andy, he had no financial service or very little financial services experience. He had built the platform at Skybet, so very much from the gaming industry, which we thought was interesting. We thought it was quite analogous to pricing risk. And he'd also, more recently, he'd been CTO for esureGroup, which is one of the largest online retailers in the UK. The CFO came from Tesco Bank and Virgin Money, so kind of innovative banking type background. The chief commercial officer came from British Gas, Centrica. Again, retail energy, and so on. So this, and I brought insurance. The chief claims officer came out of Discovery in South Africa, which is one of the probably most advanced companies in terms of telematics, but also with an insurance background. So this kind of sense of bringing together a team that had strong insurance financial services credentials, but also real digital analytics, data transformation capabilities. So there's a lot of change in the executive team, and a lot of change down the organization. But one of the other things we were really focused on was trying to bring opportunities. So during the time, we pulled a lot of people out of frontline customer service roles, people that had come in as contact center operators, trained them up to be data scientists, or trained them up to be scrum masters or analysts or whatever. So it was, I guess the whole talent story is really quite a big part of the overall esure story.
It is not as easy as it sounds, right? To execute.
It wasn't
on that. And I think especially, in the context of a PE backed, right? So because, yeah, I think especially obviously being backed by a private equity company like Bain Capital, there's a sense of urgency, and probably a very healthy one. Tell me, and I know actually probably not by design, but the timing of you joining Issuer wasn't probably the easiest either. So tell me a bit more about some of the challenges you faced.
Oh, look, it was. With hindsight is 2020, isn't it? You tell the story in a very very clean way after the event, but it was in many respects the journey was a real roller coaster, and I mean the team and the organization had to show just really remarkable resilience over the period. So if I go back to the start, I guess I mean Bain bought the organization, bought the company, and discovered that some of the reserving, and this is public. This is public domain, so I'm not telling your podcastees anything that isn't out there. But discovered that the reserves weren't as strong as they needed to be. So this meant that a lot of the pricing of historic business was not as strong as it should have been. So we had to do a lot to strengthen the balance sheet, bring more capital in through various means. We had to change the pricing. And that was certainly one of the early wins for us, just really starting to drive much more sophisticated data-driven pricing. So that was, I guess, that put us initially into very much turnaround mode, where we'd hoped to be in, beautiful building, building nirvana and transforming the company in a kind of very front-footed way, but we had a lot of early blocking and tackling and turnaround to do. So that was a kind of an interesting period for us. We had our initial program we called Brilliant Basics. So it was like, we need to be fundamentally good at pricing, underwriting, claims, and customer service. We're not applying a lot of technology at this stage. We just got to be really, really good at that so that we can survive. I guess other things that happened in the journey, obviously COVID happened, and we're not alone in having COVID affecting us. I think what was quite different though about eSure was, by that stage we were about to embark on this massive transformational program. So changing every piece of technology in the company, changing the culture, changing 35 customer journeys from back to front. Normally, and at that stage, I think people who had done that scale of change, we really didn't have the experience then of managing companies and corporations via Zoom or via Teams. So if you're mobilizing that kind of program, back early 20s, it would definitely have been, you get everybody into a room, you get everybody fired up by the mission and the strategy, and you work very dynamically, face to face, problem solving and architecting together. And we didn't have that luxury because we kind of started the program very much in the teeth of the early days of COVID. So we were, as well as learning what we needed to do to transform the company, learning what we needed to do to build a new culture, we're also learning this new ways of working, which is how do you collaborate successfully through the medium that we're collaborating at the moment. So that was kind of interesting. The other thing in there, which a lot of people had to deal with, I mean, we found ourselves just overnight having to source 1,000 PCs so that our customer contact people could actually work from home. I wasn't alone in that. I mean, many companies were going through that process. I guess the other thing that was quite big for us was when the Russia-Ukraine war started. We had probably 75 to 80% of our tech development resource was based in Ukraine, and we had particularly in Odessa. And you and some of your listeners will remember that at one point Odessa was right in the epicenter of the Russian advances, and that was really, really difficult. I mean, we were obviously trying to get a job done, but we had people that were working with us, our partners, where there was a really existentially horrible thing happening to their friends and families. So that was a really difficult thing for the company to manage from a cultural perspective. And I'm really, really proud of the way that we supported our colleagues in Ukraine through that period. It was really, really quite tear-jerking what was going on, and the way that we worked together. And then the final final couple of things that we navigated. One was personal lines insurance, which is quite a cyclical business. It was going through one of its periodic profitability troughs. So we had very high inflation after COVID, and that coincided with weak pricing. So the market itself went through a 20-year low in terms of profitability, and that coincided with us being at peak spend level on the program. So that was quite difficult. It was quite straining for the business financially. And then finally, this is
one more thing. Yeah,
one more. Sorry, I'm talking a little bit too much, but the final thing was when we were selling the business was we sold the business to Aegeus. The core weekend of the sale was when Trump launched his tariffs, which was just a huge period of uncertainty. Yeah, so look, in summary, we had a lot to navigate during the period.
Yeah. So it sounds like a perfect storm, right? COVID, Ukraine, soft market, initial challenges with the strength of your reserving. How did you? I think I'm interested about how you, as CEO, kept the morale of the team, which I'm sure at least a couple of times it felt like it's just too hard, right? So tell me a bit more, like give me a bit of an insight into how did you feel in the middle of that perfect storm, and how did you keep your team excited and driven?
Well, the first thing I have to say, I was not perfect all the way through this journey, and certainly learned a lot as a CEO through that period. I think we had a couple of things that played in our favor. We were quite a tight knit team. We had a team at its core that were very passionate about serving customers and making things better for customers. We had a very, very supportive private equity partner in Bain, who were very calm and logical when the stuff was hitting the fan, and that was very helpful. I guess I'd read a personal level. I'd read a book a long time ago about leadership called the Mask of Command, and this kind of sense that whatever is going on, the commander or the leader or the CEO needs to hold what is going on for them inside them, and communicate strength of purpose, positivity, ambition, the sense that we will get there. And there were certainly periods where my mask of command was strong, and I can continue to be very purposeful around that. There's also times where the mask slipped, and it was just,
it's human.
Yeah, it's human. The other thing that really served us well was the mission I talked about earlier. The mission and the values, play strong as one, and the dare to do different, etc. People really, in the difficult times, it helped us with decision making, but also it really helped pull people together. This kind of sense that we're on a mission. It's a difficult mission, but we will get through it, and we'll get to the other side.
Well, one of the points you made earlier about the transformation you drove was about kind of revamping the whole tech stack of esurer, right? And really, driving a much stronger data and analytics sophistication in the business. Can you talk a bit more about that?
Sure. Look. Well, as I said, one of our values was dare to do different. We thought at the time most of our competitors in the UK, particularly the bigger players, were guide wire houses, and a very obvious low risk thing for us to do would have been to take guide wire as our primary platform. Rightly or wrongly, we didn't do that. We went with I guess a challenger company called EIS for our core kind of policy engine and claims. They were based on the west coast of the US, but with this capability in Eastern Europe. We felt that would give us just a much more dynamic stack, microservices built in, completely cloud native, and quite interesting capabilities on the data side. So we put that at the center. We built Amazon Connect as and we're one of the first, certainly in financial services, to implement Amazon Connect in Europe, which is a really kind of dynamic, multi-channel, again, very, very data-rich way of running customer service. A couple of innovative picks, and I think all in all, we probably somewhere between 70 and 100 individual pieces of software we kind of replaced or overhauled during the period. The other thing that was interesting, as well as the technology choices that we made, we also moved to enterprise agile as a change methodology over the course of the period. And I think I mentioned to you before, Juan, that was quite an interesting journey for us, but one that was ultimately, I think, led to just this enormous clock speed in terms of our ability to change and outpace the competition, or outchange the competition. But this was really important for us, the ways of working and the culture around change, as well as the technology components themselves.
Two follow-up questions, one on the technology stack and one on the agile point you just mentioned. So when you were thinking about the technology stack and making that brave decisions, right? Even if they were the right ones, then you were not following the herd in those decisions. What was driving those decisions, those architectural choices? Were you trying to drive automation and lower costs? Were you trying to drive better insights and data analytics for pricing, or a combination of both?
Well, there was certainly this. I mean, you've touched on certainly a couple of the reasons. I mean, I'd grown up in large, complex companies with large amounts of legacy, and I thought there was a real benefit in being able to have all your data in one place, dynamically updated on a real-time basis. I'd never managed to achieve that because the complexity of the legacy and the complexity of the business that I'd previously been in just didn't allow it. And we felt that if you could do that, you would just have huge insights in terms of how you price business, how you create propositions, how you tweak customer journeys, how you make decisions in claims. So that sense of having a really integrated, dynamic data set, we felt was really important. The second thing was that we were very, and some of this comes from my days with Cytora, working with fintech. We are conscious that there's huge dynamism in terms of the kind of fintech type offerings, and we sense that would continue to innovate. So we wanted to have a technology stack where you could plug and play different components. So at times you might have software you develop yourself. Other times you might go out to a vendor. So the interoperability, the APIs that allowed you to connect different components in a very dynamic way and a very pacey way were really important. that was also important for us in terms of our relationship with the main price comparison websites. So we were at 90% of eSure's business came from the price comparison websites. We certainly became the partner of choice for the PCWs, not because we were the biggest, but because we could react quickly, we could implement new ideas quicker than anyone else. So I guess the data set was important, but also the ability to innovate by having a very flexible, dynamic, and open platform was also important. And I guess the use case, and ultimately all of that supported us starting to, certainly when I left, we were one of the leaders in terms of AI deployment. And it was a lot easier because we had a really curated data set. We had a data set that had over 1 trillion data points in it, and we were updating the daily updates on that data set. We were putting about 35 million new data points a day into the data store. So that kind of architecture really supported the launch of AI.
And this is where like execution eats strategy for breakfast, right? There's like some of the concepts you've described are simple, and obviously like you want to have all the data related to your policies. So having the insured, the policies, the claims together in and connected. Like nobody would argue with that, but reality is like very few insurers right can even do basic things like matching a policy to a claim, right? So I think it's huge.
Yeah, look, we were helped by the fact we were a relatively simple business. So we were 1/2 distribution channels. So we had price comparison websites, and we had direct, and then we had really 2 products, motor and home. If you compare that with some of the bigger players, an Allianz or an Aviva or an AXA, who have got all the distribution channels, they've got all the products, they've got commercial and personal lines, and they're typically sitting on decades, certainly in general insurance, decades, and in life insurance is even more of legacy technology. So we had I guess we had a cleaner and simpler start point, but we also had that was our mission. Our mission was to transform it. And it's a lot more difficult to do really big technology change as a listed company, where you've got your pressure is to deliver quarterly results to the city. One of the advantages of private equity is you can have a period where you're investing really strongly in a business to ride a J curve effectively.
Yeah. You're more midterm focused. That was one of the points I wanted to ask you. I mean, you mentioned your transition to agile earlier on, and in one of our previous conversations, we touched on conceptually agile makes a ton of sense and obviously drives value, and it's very focused on customer value and driving value fast. How do you manage that with a private equity investor, which I assume would be kind of more used to like business cases, long-term investments? Like, tell me a bit more about those dynamics of when you went to your board and said, well, we're moving to agile, we will deliver value, but we cannot tell you what's going to be delivered next month.
Well, look, I think this is probably one of the trickiest things we had to navigate, and I think at the the last 12, 24 months of my tenure at eSure, the agile process was really working well. We'd matured. All the technology was in place, so you were starting to innovate and apply agile to a relatively mature stack. Whereas at the beginning, we were trying to evolve it at the same time as making a lot of technology choices. We were trying to persuade the board and the investor to make the investment. So I think if I go back, I'm maybe not answering your question here. I'd probably advocate more waterfall and business cases at the beginning of our journey, and probably more agile at the end. And we didn't always get that balance right. But one of the things we ended up having to do was almost our interaction with the board. We had to educate in the traditional way around, we will invest this amount of money, we'll have this amount of costs coming out, we'll have this amount of additional cross-sell, this will be a pricing advantage. We had to do that. But over time, as we evolved as a team, the board and the shareholder became a lot more used to, this sprint. We've got 10, or it was more than that. It was at peak, it was 50 Scrum teams. This is what each of them are doing. These are the outcomes that they're going to achieve. So we moved from a very traditional waterfall, big business case type approach to much more, and the board moved with us on that. But it was definitely a journey that evolved over a multi-year period.
What did it look like in practice? So I assume, did you commit to certain business outcomes for a given fiscal year? Like, this year we're going to reduce, or whatever it is, to reduce expense ratio or improve profitability?
So look, when it was mature, we had a quarterly business review, which was basically, we sat in a room, all of the executive team and all of the leaders of the value streams. So the business was split into customer value streams, and we'd sit and we'd review as a collective. So we were about 20, 30 of us in a room. We'd review all the things that happened in the previous quarter. So what did we deliver against metrics? And these metrics might have been service metrics, they might have been risk metrics, they might have been financial metrics. What did we deliver against those? Then we would look at what we were planning to do to impact those metrics. And all of these were coming up through the teams. So the teams were saying, I've got this amount, or I've got 3 squads or 4 squads of capability to invest. My priority is to try and fix this customer journey or move this cross-sell metric or whatever. And they would present that to the exec team, and we would then sign off the activity for the next quarter. And then we went through this cycle of reviewing it. Over time, if we would try to strategically move resources between value streams. So, if you got to a point where there was actually more opportunity or more priority in claims, we would try to move resources more into the claim space. But I think what's helpful about that approach is, if you're sitting driving change in the business, in a part of the business, you own your change capability. You've got to account for it every quarter, but you really, really own it. So you're not in this endless business case and going up into some bureaucracy at the center, and you never know if you're committed or not. You can really, really get on with the business of changing things for the benefit of the shareholder or the benefit of the customer. And I found that as something that eSure was the first time I really saw that working properly at scale.
So that is clearly different from how probably you drove change or oversaw change in some of your previous experiences. So with what you've seen now at eSure, is that model applicable in a larger, like a QB or an Aviva? Is it just not fit for purpose, or what would you have done differently in those?
That's a very interesting question. I think if you can get it working at scale, it just brings so much pace and autonomy, and you move to a point where you've got the whole organization developing and changing pace. But in order to do that, you got to, as an exec team, you've got to let go of a little bit of control, and that's the bit that's really, really quite hard. Particularly if you've got this you've got quarterly reporting cycles, and and you've also got a tradition of business casing everything. But look, I certainly I need to contemplate whether, how big a scale can you do that successfully over, and also, does it change with AI? Does the methodology subtly change? But certainly for eSure, the scale of eSure and the journey we were on, it was a really, really powerful part of our armory.
And listening you tell this story sounds like probably also one of the enablers of this different way of driving change is that alignment. So I guess two things. One is the alignment within the executive team, like the whole executive focused on the same objectives. And second, a true company-wide mindset of driving transformation and change, right? That which you touched on at the beginning, right? And probably unless you have those two elements, it's probably more difficult, right?
Yeah, I think so. And also, again, the scale is important here. eSure at maturity at about 1,100 people in the organization. So it's a lot easier to get that level of alignment versus Allianz, say, who may have 100,000 people globally. It's a very very different beast, and that's one of the ways that you can compete against giants, being smaller and more fleet of foot.
So to wrap up the episode, I wanted to finish with one question, which is that obviously there's a lot of private equity activity in the insurance market at the moment. Many senior executives are considering getting into either portfolio company or as in an operating role within a PE firm. What would be your advice on do's and don'ts, I guess?
Well, okay, it's like all business. It's not always easy. So I think that the things that are important if you're going to be a successful private equity executive, I think you've got to have great resilience. I think you've got to have a vision. You've got to execute well, and you've got to be prepared to commit to outcomes, financial outcomes, customer outcomes, and then drive towards those. I think you've got to have. I don't think this is just a private equity comment. I think it's a wider comment for financial services. I think the days where technology people don't understand the business and business people don't understand the technology, for me, are completely gone. You must. I wouldn't employ executives that don't understand the technology that they're running. So I think that's quite important. But it's very, very rewarding. There's a huge sense of kind of accountability, a huge sense of achievement. As I mentioned before, your ability to invest behind the J curve and do what needs to be done because you're going to set the business on a stronger trajectory. It's a lot easier to do that in private equity than it is in listed company land.
Well, that's very insightful, David. I thought your advice was going to be don't take one of these roles right before COVID, Ukraine war.
Well, or go and see somebody that has a crystal ball that can tell you what's going to happen in the future.
David, it's been a fantastic opportunity to chat to you. I tried to, as you saw, kind of have the conversation around how did it feel to be in there, and I think you really brought it to life. So really appreciate you joining me today.
Well, thanks for the time, and hope you have a great week.
Thank you, David.